Alpha Metallurgical Resources makes up 81.2% of Mohnish Pabrai's US stock portfolio. And if we look at all of his investments that we know of, including the international ones, it is his second biggest position and it makes up almost 18% of his portfolio. So let's try to find out why this very intelligent investor decided to make such a big bet on this one company. Alpha Metallurgical Resources is a mining company which sells both metallurgical coal to produce steel and thermal coal to generate power. It operates 24 active mines and 8 coal preparation and loadout facilities. This company was created in 2016, so let's see what happened to the stock since then. If you were to invest $1,000 into Alpha Metallurgical Resources in 2016, you could buy around 59 shares. And today, they would be worth around $12,878. But let's not forget about the dividends. Through the years, you would receive $980 as dividends. So if we add the current value of shares and the dividends, we get $13,858. So that is a gain of 1,285% since 2016. That is very impressive. But as we know, the future does not have to look anything like the past. So let's analyze this company, value it, and try to see where it's heading in the future. Individual insiders, that is a check. 12% of the company is owned by individual insiders, so that is very nice. We know that the management has its skin in the game. There is a big chance that they will take good care of the shareholders because it is in their own best interest. And are individual insiders buying? That is an X. In the last year, individual insiders sold over 74,000 shares and bought only 16,000 shares. And do super investors own this company? That is a check with one super investor, and it is of course Mohnish Pabrai. And is he buying right now? That is a check. He bought over 362,000 shares in Q2 2023. Return on invested capital, that is a check at 14.1% median returns. And we want to see this number higher than 10%, so a decent result here. And free cash flow growth, that is a check at 44% annual growth rate. And also here we want to see this number over 10%, so in case of free cash flow, the growth is exceptional. But we have to remember that it is a cyclical business, so this number may be quite a bit different in the near future. And what do we know about net profit margin? It is a check at 26.7%, and the industry average is just 16%. But it does not tell the full story, because if we look at the 5-year average net margin for Alpha Metallurgical Resources, we see only 2.9%. That shows how cyclical this industry is. And now let's take a look at share buyback. It is an X with 36.9% of new shares issued since 2016. But we have to acknowledge that for the last 2 years, they are buying a lot of their shares back. And let's take a look at the debt. It is a check. This company has almost no debt currently. That is very nice. If we have a cyclical company with a lot of debt, then if the cycle will be at the bottom for too long, it may bring such a company down. In this case, it looks pretty safe. The dividend yield is 0.9%. So in the last 12 months, shareholders got $1.86 per every share through dividends. And the payout ratio, that is an X at only 3%, We want to see it somewhere between 20 and 50%. So this dividend is rather a small one. And if you want to concentrate your investments on dividends, then you should probably look somewhere else. And what do we know about the dividend growth? It is an X. They paid dividends only in 2017 and then in 2022 and 2023. And what is very important in this situation is that the board declared that they will pay the last dividend at the end of 2023 and then they will close the dividend program. And in the future, they will use this money to buy back stock. So this dividend is going away pretty soon. Price to earnings ratio is 3.7, so that is very low. It means that for every dollar this company earns currently, we have to pay only $3.70. But let's not forget that it is a cyclical business, so the earnings can change very rapidly. So to value this company, we will use a discounted cash flow formula and we will make 3 scenarios of its future growth. And for this calculation, we will use a 5-year average free cash flow and not the recent one, because it is a cyclical business. So we want to average things out to get closer to the actual intrinsic value of this company and not be fooled by short-term results. So in the low scenario, we will estimate a growth of 3% for the first 5 years and then 2%. In the medium, 4% and then 3% growth. And in the high scenario, 5% for the entire 10 years. Now, the reason I used such estimates is that the coal mining market is estimated to grow at around 2.6% between 2022 and 2027. So the low scenario is in that ballpark. And if we look at the annual growth rate of this company, we see that the revenue went up by 24%, free cash flow by 44%, and earnings per share by 28%. But if we use these numbers in valuing a cyclical business, we would be just fooling ourselves. So in the medium and high scenarios, we predict that this company will do a little bit better than the average, but nothing close to the recent results. And with such estimates, the intrinsic value in the low scenario is $312, in the medium scenario $334, and in the high scenario $367. But we are not finished yet, because we should always add a margin of safety to those prices. I use a 30% one, but you can use any margin that makes you feel comfortable, that is right for your investment style. So with such a margin, we get in the low scenario $218, in the medium $233, and in the high one $257. And the current price is around $220. So it is all in the green except the low scenario with the margin of safety. It looks like this company is either cheap or fairly valued at the current time. But let's not forget that Mohnish Pabrai bought his shares at around $165, so substantially cheaper. And it does not look like it's too late to invest because the price still seems pretty nice. But as with all cyclical businesses, it is really hard to predict the future. So we have to be extra cautious with our valuation. If you enjoyed this video, you may want to check out my analysis of Rio Tinto, which is also a mining company, but much more diversified. Thank you so much for watching and see you in the next one.